First, I'm so happy that the market is finally starting to slow down a little bit. This last year plus has been absolutely brutal for buyers. I mean, it has been so stressful for people trying to buy a house. So I just want to get it out of the way. First and foremost, I'm happy to see the market slowing a bit. The real estate market in Winston-Salem and Greensboro and High Point, it's changing. Just yesterday, the Fed raised rates again. And how did the mortgage rates react to that this morning? They actually went down. So again, this is another good reminder that the federal funds rate is not directly tied to mortgage interest rates. So the market was kind of expecting that, is what I've been told, the mortgage market anyway. So I had that increase kind of baked into rates already and actually went down a little bit today. Now where they're going to go in the future, of course, that remains to be seen, but it's another good reminder. I'm Jeff Valentino. I love helping people buy and sell houses. My contact information is below if you need help with that. But what I've always tried to do in these market update videos is take the data over drama approach, right? Let's actually trademark that right now. Data over drama, trademark. Anyway, I want to give you not only the national data, but more importantly, the local data, and sometimes even the hyper-local data of what's going on right now so you can make a good decision. And even though I am astonishingly accurate at these predictions, I mean, mind-boggling sometimes, I don't actually know the future. So I do know what's going on today though, and we can use that as clues as to what might happen in the future. So here is a couple quick stories just from the past 7 days on offers that I made with 3 different clients. Louisville, under 400,000, nice house, nice area, highly desirable. We made a really aggressive offer. I mean, like kind of like over asking, like early spring offer, like we were aggressive. Conventional financing, strong due diligence, 20% down, we missed it. Greensboro, another nice house in a good area. We're in a multiple offer situation. We ended up winning with 100% financing, a loan that would have got laughed at a few months ago. We won, but guess what? We did not go over asking price either with multiple offers. We got that one under contract. Winston-Salem, another nice house, recently rehabbed. The seller priced it like they thought it was a couple months ago. It sat on the market for a few days. We saw it. We made an offer under asking price. They countered. We stood firm. They accepted. We're under contract in that one. So not only is the real estate market local, it's hyper local. You have to have someone that knows what they're doing in this market. It would have been really simple for me in either of those last 2 scenarios to tell my clients to go way over asking price or to make a different offer than what they did. But because I was not only doing, 30 to 40 transactions a year myself, remember I'm also doing compliance for over 80 agents in our office. So I'm seeing every contract, lots and lots of really, really local information, was able to help those last 2 secure homes in competitive situations. All right, so just this past week, the Triad Business Journal published an article that says even though inventory is up, high demand throughout the Triad continues to cause home prices to rise. And that's kind of an overarching theme to what we're going to see here, but let's take a look at some specifics that I'm seeing locally right now. In this chart, I've mentioned this one before in my videos, but you'll see finally new listings are higher than properties that are going under contract in this same 7-day period. So inventory is starting to build. But at 419 listings, new listings compared to 395 going under contract in this past 7 days, inventory is building, but not much. You see that, demand is still relatively high. And on this chart, while it shows, there are definitely more homes for sale, you'll see we're still near all-time lows as far as total available inventory. And one thing to point out on here is we sell, give or take about 22 to 2,300 homes a month throughout the Triad, Winston-Salem, Greensboro, High Point, and surrounding areas. We sell about 22 to 2,300 homes. Right now, if I look at all active listings, there are slightly less than slightly over 2,400 homes on the market right now. So again, just a little over 1 month of inventory, and we need to really be, 6 would be balanced. 3 months of, 2 to 3 months would be kind of what we were seeing in 2019 before the pandemic. So we just, we're in a similar situation of still low inventory with a lot of demand. But there is good news in all this. There is good news because inventory is higher, because some buyers were priced out of the market with rates going up. with home prices going up. They've just got frustrated and decide to sit on the sidelines. Because of some of those things, you're not always up against 10 offers. You don't have to drop everything, go make an offer way over asking price on every single house in every situation. Again, some of it is going to be area dependent because some areas are still really competitive, but a lot of the areas, we're starting to see these things loosen up. And that's a really good opportunity for buyers. But a couple things to remember real quick. First, like I said, some of this is because buyers have gotten priced out, rates have gone up. They can't afford the same amount of money that they did. Maybe they're just taking a break, or they're just frustrated, or whatever the case may be, for sure. So that's some of this. But some of this is just a stabilizing market, which is what these interest rates were designed to do. Another thing to remember, some of this is just plain old seasonality in the Triad region of North Carolina. Most markets, actually, right? Kids get out of school. Families haven't felt comfortable or haven't been able to take a vacation in, a couple years. They do a lot of traveling in, these summer months here. So some of this is just seasonality. And we traditionally see the market in Winston-Salem, Greensboro, High Point. We traditionally see this market slow down through these months of summer with less activity from buyers. So again, some of this is just more, normal seasonality. And another thing, this morning, the GDP numbers came out. It's been another quarter again of our economy shrinking. Is that a recession? Is it not? You make your own decision on that. But traditionally, if we are in a recession, right, traditionally there's a couple things that happen which you need to be aware of. First thing is interest rates tend to come down during a recession. So if you bought in the last, few months after this rate increase, if we are in a recession, look for an opportunity to refinance over the next, 6, 12 months, sometime in there when rates will come down lower. Do a little Googling. There's a lot of data to support that traditionally when we're in a recession, interest rates go down. The other thing to know is typically during a recession, home prices go up. They do not go down. 2008 was one of the exceptions to that. There was another one in I believe the early 1900s, but traditionally during a recession, home prices tend to go up. Now, not as fast as they were obviously the last couple of years, but traditionally they do tend to go up. The other thing we're seeing right now is rents across the Triad have gone up about 25% in the last year, which points to buying a home being more affordable than renting once again. Now here's some things that, this is anecdotal evidence, but to me, it's still real nonetheless. I've been seeing this a lot these last couple weeks, and I want to make sure I tell you about it. I think there's a portion of these new listings that are sellers that are just still pricing like it was a few months ago. They think they missed the boat. They got their home on the market really quick. It's not show ready. It's not in the greatest condition, and they overpriced it. I'm seeing, I won't just say trashy homes because they're not, but they're not, quality listings. We're seeing a lot more of those right now. So we have to keep an eye out and look for that if you're thinking about buying right now. That's another reason why we're seeing some price reductions, because I think these sellers are finally taking the clue. We're not where we were a few months ago. We got to adjust our price. I'm just seeing a lot of that, homes that aren't in tip-top condition that are still trying to get top of the market dollars, and it's just not going to happen right now. The other thing I'm seeing is my phone has been blowing up the last 7 to 10 days. A lot of these FHA, VA are just frustrated buyers. They're starting to come back into the market. These buyers that their offers would have got laughed at a few months ago, they can get a house now, they can get under contract, and they don't have to go crazy to do it. They're starting to come back into the market. My phone, I've gotten a ton of calls, and a lot of them have been non-conventional type of financing. They have digested this rate increase, they've reset their budgets, and they're ready to jump back in because things are slowing down. It is a better opportunity for buyers. So those things, still point to strong demand in the market right now. Regardless of what's going on this minute, we're still seeing strong demand. So if you're a buyer, the market still is, it's not crazy, but it's definitely not, recession, bubble, crash, any of those scary things that you might hear. It's definitely not happening right now. Sure, there are concerns. Will inflation continue to go up? Will rates continue to go up? Will hedge funds, nobody's talking about this one, will hedge funds keep buying about 10 to 15% of all the houses in the Triad? And are those homes off the market, the traditional real estate market forever, because will they ever sell them again on the open MLS, or will they repackage them and, sell them to another hedge fund. I mean, that's for sure a concern because they bought a lot of houses over the last couple of years. So sure, there are concerns. Also, new construction tends to slow during a recession. That points to a little bit lower inventory. Sellers, if they have a rate in the 2s or low 3s, are they going to want to sell if they don't have to? If there's not a lot of good inventory and they got to pay, double or 2.5 times the interest rate for a house that they're not super excited about, will they even list in the first place? That points to lower inventory. I mean, it remains to be seen, but those things point to lower inventory. If demand, still stays stable, that points to prices continuing to rise, albeit not as quickly, but it still points to being a competitive market where prices will rise. So if you're thinking about selling, you have to have somebody that knows how to market your house. You have to price your home correctly, and you have to have it show ready. I mean, it can't be just, throw it on the market with cell phone pictures and don't do any work to it. Those days are gone right now. So you have to have your house ready to be put on the market. It's got to be marketed correctly and it's got to look good. Buyers, in a time of rate volatility and still a competitive market, I'm happy things are slowing down some. I'm happy it's not so stressful for buyers. That's such good news. But you got to stay within your budget. Find someone that you trust. Formulate a plan and go out and get that house. If you need help with that, you can email me directly at jeff@govalentino.com. Thanks.